Hello, today is Sunday. It is the 12th day of January 2014. My name is Derek and welcome to today's video. Let's start off with the open, and the open is I will not ask you to turn off your ad blocks. Why not? Well, many other people on YouTube and in live streaming have. Some sites have even restricted use because, well, ad blocks are turned on. Does it seem smart to require ones to watch ads for products and services that you may not be interested from a company where their number one objective is the gain of counterfeit money, otherwise known as fiat currency? Not that known. It's more known as dollars or money. Yet money needs to have a store of value, which is why it's important to insert the word counterfeit beside it. In this video, we're going to be talking about when did silver reach the bear market, and the final, which will be my final football pick of the year, which will be this year's Super Bowl picks. I've already given out the playoff picks early, and they are now 4-1 against the spread with one more play tonight. So let's get started. Let's go over a question. And apparently, if you want to know, find your inbox, youtube.com/inbox. Just that easy. I could not figure out how to find it. And there's not really too many messages in there. But one of them was asking, when did silver officially enter into that of a bear market? When did the technical signs show it coming? And I first want to go over this word officially, because this is not, I don't like this word anymore. Because that's a word you can use to lie, in my opinion. For, if you ask me when did silver technically enter a bear market, well, that would be a little bit different. But officially, you could just make something up. After all, you got official employment. The official employment rate. The official inflation, official 911 story. So to me, the word official has lost a lot of its meaning. Okay. What we're going to do, this is the price of gold and silver going back to 1968. You got gold, silver 217, and then the gold to silver ratio. So back at this point, prices were 2, then 69, $1.72, 1975 up to 4, and then as you can see, the prices would eventually go higher up to 6, up to 8, up to 8 again, up to 9, up to 12, up to 16. Well, that's definitely a bull market in itself. Get up to 30. And then, of course, up to about 50. So the move that occurred from 1972, seen a move come from $1.25 up to 50. And then from 1980 to about 2002, it crashed down. Let me just do it a bit better. And then did a whole bunch of sideways movements in a range of 4 to 5. So the bull market came to an end many, many years ago, considering the move higher that we had only managed to repeat the resistance of the previous 50. But getting even more technical, it got up to $21 in 2008. Pulled back down to 8.5, and then up to 50. So at this stage here, you can at least say you got this pattern of the higher highs and higher lows. And that's really what defines trend. Higher highs and higher lows is an uptrend. Lower highs and lower lows is a downtrend. But if we go back to the original move, I really cannot say that the silver market is in a very nice, large bull market until it can have several higher highs and lows above this 50 mark. Therefore, it has been since 1979, 1980, since silver has been in a massive bull market. Regardless, with that being stated, The move from 50 came down to 32, and then came up to 45, and then down to 26. So on the more intermediate term, when you were breaking down below here and you settled well below 30, the bull market was technically over at that point. And then, of course, you do a whole bunch of these, it worked out to a whole bunch of 26 tests. And then last year, when 26 was taken out, that means on more of the longer term markets that any bull markets were already null and void as it is. Technically, though, if you look at the high of 21, you look at the low of 846, and then a 50, whatever we come down to here. Right now it's at 18. If 18 is the higher low and then boom, it goes right back up, you could technically say that the pattern of higher highs and lows was really never taken into play. But there was two levels. Of course, the first level was breaking down below 32 in 2011 and then breaking below 26 in the year 2013. So that would be it for the silver analysis. And now let's go on with this year's Super Bowl selection. And what I stated before the playoffs started was that road favorites and quarterbacks playing the first ever playoff game generally do not do well. Indianapolis was a home underdog against the Kansas City Chiefs in the first week. That was a winner. Green Bay Packers were a home underdog against the San Francisco 49ers. That was a loss. The New Orleans Saints were playing the Philadelphia Eagles against Nick Foles, who was playing his first ever game. That was a winner. And the second week, which is this week, play all four home teams to cover the spread. Yesterday, New England was a winner, Seattle was a winner, and live today, Denver laying 8 points against the San Diego Chargers. Now, there is another home game between the San Francisco 49ers at the Carolina Panthers, but you got contradicting results because you are playing against a quarterback playing the first ever playoff game in Cam Newton. So to me, there is no play on that one. And for the Super Bowl, underdogs are 9-3 against the spread the last 12 years. So my selection for this year's Super Bowl will be whoever is the underdog. Thank you for tuning in and have yourself a great week. Bye-bye.